All right, we are recording. Hey everybody, my name is Lucas. Welcome to the Deep Dive YouTube channel. And I just made this channel because I've been following this guy, Chris Quolamagi. I'm not sure quite how to pronounce his last name, but I've been following him now for a little while. And one of the things he mentions quite a bit, as well as Stockbee, Pradeep, and other professional traders, is how important it is to do a deep dive into stocks. And one of the things I noticed is there's all these people around Chris who are doing awesome things like taking clips out of his episodes and putting them on YouTube and stuff. But I have yet to see an actual video of somebody going through the process of doing a deep dive into stocks. So I thought, why not make some videos of that happen? So I'm going to tell you a little bit more about me, and I'm going to tell you the process that we're going to go through. But real quick first, I want to do the video of what this is inspired by, which is by Chris. So it's this video here. Let me just share my screen here. All right. So this is what we're working with.
Everyone needs to, if you haven't done this yet, if you're struggling, if you're not getting the results you want, you get the EC 2000, okay? Click US stocks, okay? There's 4963, almost 5,000 stocks here, okay? Then you go to that monthly chart, and then you start looking at all the big moves. Every stock that made a big move, let's say doubled or tripled or in a short amount of time, okay? You put in a separate watch list, okay? You're gonna get a watch list of 1,000 stocks. You just go back and look. There's going to be thousands of, at least 1,000 stocks, because most stocks have made a big move at least sometime during their lifetime, okay? You go back and look. The biggest moves, obviously the very liquid ones you can exclude. And then you go through that watch list. Look at the daily charts. You can get e-signal. On that one, you can go back on the daily charts, look at daily charts, and even intraday charts going back 10, 20 years, 30 years. Maybe not 30, but at least 25 years. And then you start looking for patterns, okay? And you will see the exact same setups I trade. They happen over and over and over again. And you're probably going to find your own setups. You're probably going to find at least 3 to 5 setups that occur over and over and over again. 3 to 5 patterns, okay? You need to build a foundation. You can't just trade blindly, not knowing, following some other trader, being in these alert services. No. You need to develop your own expertise. You need to develop your own setups, things you believe in, things you have backtested, that you know they work. That's pretty much all your problems stem from not knowing what the hell you're doing.
All right. So the idea is to basically do what he's talking about there, is to go through a stock, look at the news, look at the fundamentals, look at the price patterns, go through it bar by bar, and hopefully this will be entertaining and fun, and you'll learn something, and it'll also be useful to me. So just a little bit about me. I have been trading for a while now. I'm about 35 years old. I started trading back in my early 20s. I actually traded futures during the 2008 crisis in October and November. I didn't know what I was doing at all. I was in college. I had some money from my grandma, and I was just throwing it at things. But after college, I joined a proprietary trading firm. I tried to make trading a go, and after about 10 months or so, I gave up. It was just too difficult, and it didn't help either that the prop firm that I joined was kind of a scam. They just kind of took your money, and they didn't really have a winning edge to give you to trade. So I floundered. So basically, I quit. I got out of the market. I pursued other things. And around 2018, I got interested in it again. And I got into just all kinds of different stuff. I started learning about macro. Maybe I'll be a macro trader like Soros. And then I started learning about DeMark signals and stuff. And so I just kind of floundered around more. I didn't really know what I was looking for until around 2020, when I started getting into momentum, and I actually made some money. 2020, I actually made some money that year, which was like a real light bulb moment for me. And that led me to discover Chris last year, around 2021, April-ish, I want to say, maybe March. And I started following him. Now, sadly, I missed the January, February momentum boom. So last year, I was pretty much chopped up. I really adhered to the thing Chris talked about, which is, maybe cut 30% to 50% of your position after 3 to 5 days and then let the rest run. Well, I would cut 30% of my position and watch the rest just tank. And so I had tons of trades that just kind of started to go and then came back and pittered out. I think it's the experience that a lot of momentum traders had last year. So all that is to say, I'm not some super profitable trader who's, here to teach the masses. I'm here to learn just as much as you, hopefully, watching this. And the type of personality I have, so I'm kind of a very curious person. I'm really curious and I'm open-minded. And so I always like learning about new things. And so the idea of going back in time and looking at a stock and going through its fundamentals and doing that for thousands of hours just seems like really boring to me. Like, I do not want to do that. So I thought I could use a YouTube channel like this to discipline myself and go through it with you and hopefully get feedback from you guys saying, hey, you're doing this right, you're doing this wrong. And I actually did something similar over the last 3 years with a podcast. I had some ill health in my late 20s, and it was the kind of thing that doctors really didn't know what to do about. And so I started a podcast. It's called Quack's Podcast, Quax. You can still find it. It's on YouTube. The last episode was released in December. I started this podcast. I did like 100 episodes. I interviewed experts. I just went and dived into all the different nuances of health, and it worked. Like, over 3 years or so, I was able to regain my health, and now I walk 10 miles a day. I lost all this weight. So the power of putting yourself out there and saying, hey, I'm going to try this and I'm going to learn through this, and maybe, I can do it in an entertaining, fun way that you'll want to watch too. I think that's really powerful. So that's just a little bit about me. The whole idea of doing a deep dive is that you move your knowledge of stocks. See, everybody knows the rules, right? Everybody knows the rules. Like, if you're trading one of Chris's systems, it's the high type flag and it's riding moving averages. Like, everybody knows those rules. But when you do a deep dive, you move those rules from something you know in your head to like something you know in your body. And that's the goal. Denise Shull, who is a awesome kind of psychologist, or I don't know what she is, a therapist, but she's worked at hedge funds and stuff. Like, she's a therapist for traders. And she says this line that is really key, which is, it's not enough to just know something, one must also feel it. Meaning, just because you know that an edge is present, if you don't feel it, you're not going to be able to act on it. And so the idea of doing this deep dive is to get that knowledge deep in your bones. So that's the idea. We played the clip of Chris. So let's get into it. I'm going to show you the tools we're going to use and what we're going to do. Let's do this. So I'm going to share my screen here. Okay, close that out. So the tools we're going to use. We're going to do a new note in Evernote. So we're going to use Evernote to take screenshots and write notes and key observations. We're going to use this ticker terminal, TIKR, which is awesome for news. So you can go to news here, and they have these significant developments that go back quite a ways. So we're going to use that to find out news. We're going to use Seeking Alpha here. If ticker doesn't have the news, then Seeking Alpha probably does. It's a little bit clunkier to use, but it does have news going back farther in time. We're also going to use Thinkorswim here to actually go into the past. I know a lot of people like TC2000. I've been using Thinkorswim back when it was an independent company. Like, I used it in 2007, 2008. I am so enmeshed in this program. It can pretty much do most of what TC2000 can do. So we're going to use Thinkorswim. I'm sorry to those who do use TC2000, but it should be very, very much a similar experience. We're also going to do something, we're going to employ a strategy that I haven't seen Pradeep or Chris talk about much, and that is we're going to go bar by bar of the run-up period. So we're going to do exactly what Chris says. We're going to look at stocks that have had, on the monthly chart, we're going to find ones that have had really nice runs, like 100, 200, 300% in 6 months, 3 months, whatever. And then we're going to not look at the daily bar chart. We're going to go back in time to when before the run started, and then we're going to click through it bar by bar. And what this does is it kind of lets you get an experience of what it's like to go through that experience of what it's like to go through that stock running up, because obviously we know that it's going to make a big run, and that's a huge advantage. But we don't know how it's going to break out. We don't know if it's going to break out and then fail it and come back and come back into the range and then launch off. We don't know if it's going to do undercuts. And so it kind of gives us an idea of the execution of the edge that we're looking to develop. So I'm going to tell you at a certain point, don't look, and I'm not going to look. I'm going to cover my eyes, and so then we can go by bar, and we can get surprised, and we can come up with trades. We can say, okay, I would go long here, I would go short here, and we can see if we're right. It's a practice that I've done before in the past, not with Chris's system, but in the past, and it's actually really useful because you get to see, oh, I was totally wrong there. Oh, I tried 4 times to go long this thing, and it was only on the 4th time that I went long that it actually blasted off and made me money. And so you can get some really good little data points there. We're going to be looking for height type flags, episodic pivots, tight ranges to play from, all that stuff. I'm going to explain all the studies and stuff on this chart, so don't worry about if it looks a little crazy right now. And yeah, we're going to go from there. All right, so let's get to it. Let's select a stock. I haven't pre-selected a stock, so I don't know what we're going to be looking at. Let's see, which one was it? It was okay, this huge universe of stocks here. These are thousands of stocks. We're going to start with the A's, or maybe the C's. All right, we're going to start here. We're going to go to time frame. We're going to go monthly. We're going to do max. Okay. So it's had a nice run up here. It looks like it's about a year long. I think we're maybe looking for maybe 6 months or something. We don't want this video to be too long. That's, if we did a stock like Apple, it would just take forever. And we're also probably going to avoid biotechs just because the news on biotechs is so complicated. So this one's recent. Siri, this is from last year. That's actually an option. Let's look at that one. All right. So we got 1, 2. Okay. So so let's see. December of 2020 is when it started to base, and it kind of went through this period. So we're gonna do CEO. Oh no, that's a biotech. We're not gonna do that one. Sorry about that. Like I said, I didn't plan a stock out ahead of time. You're just seeing the actual process in real time here. All right, let's see. Yeah, this is CGC. This is a pharmaceutical, biotech, life sciences. It's amazing how many healthcare stocks have these crazy rips. All right, CHGG. This was kind of a popular stock last year. I didn't trade it, so this would be new to me. This had a nice run up in here. We could look at. It's just a little too much time. I'm looking for more short term so that we're not doing this video for the next 2 hours. CHPT. This is electric. Perfect. We don't have any earnings reports during that time though, so let's go back. Chewy. Most people know that one pretty well. Let's see here. CO? What is CO? This is office REITs. Man, we're not going to do a REIT. Oil, leisure. All right, well, let's just pick one here. I don't want to go through this all day. Steel. Here we go. Let's do CLFD. It's run in 2013 that bottomed out in 2012. So it looks like if we go back to maybe August of 2012, we'll be good. CLFD. All right. And then I should also say, after we go through this process, I'm going to write some key dates down, and we're going to use the on-demand feature within Thinkorswim to actually see maybe there's like an interesting day that we can look at so we can kind of get how we might enter the trade. So we're going to do that at the end. So CLFD. All right, so this is the point where you want to avert your eyes. I'm not going to look so that you don't know. So close your eyes, and we're going to go back in time until we're, let's say, I said August of 2012. I think that's about there, right? Let's see. Yeah. Okay. So, all right, cool. So we are here. We're in about July of 2012 here. So let's talk a little bit about what you're seeing on the screen. So I have this white line here, which is the S&P 500. So that's going to give us an indication of what the market is doing while this stock is doing what it's doing. All right. So we're going to know, like right here, obviously the market is very strong. CLFD is very weak. Let's just make sure we're recording. Yeah. Is very weak. These little things are when the earnings happened. Down here, this blue line, we don't need this. So the green line here is average volume. We have this plot right here, ADR chart, plot 20, which is telling us what the ADR is, so we can kind of get an idea of what how much volatility is within the stock at that time. As far as the bars themselves, I don't really like red and green. They seem really, I don't know, violent to me. So I pick white for up bars, blue for down bars. You'll also see in there some kind of purplish pink bars. Those are bars that are inside days. Inside days tell us that there's kind of a coiling of volatility, and so I want to know when an inside day is occurring. And them being purple, you can see there's like one there, there's one there. That's like a really useful thing to know. It's just kind of good shorthand. These green lines are the yearly opens. It's always good to know. I know a lot of fund managers and stuff, they look at yearly opens just to know where a stock is, kind of just how it's performing that year. So obviously in 2012, CLFD is not doing good. It's, it started off the year at its highs and it's just gone down ever since. Moving averages, the big white thick one is the 200. The purple one here, that is the 10. These are all SMAs, simple moving averages. This is the 20. The yellow is the 20. The light blue is the 50. The pink is the 65 EMA, and I recently started using this one because Chris uses this moving average in some of his old videos, and it actually really works sometimes. It's amazing how often the market will adhere to it. So I started using it. I don't know why Chris stopped using it, but it is, I think, kind of useful. The green is the 100, which is also the weekly 20. And then I'm not using the daily 150. I know Chris uses the daily 150. I don't really know what the use is of it, other than that it is it is obviously within the 50 kind of thing, 50, 100, 150, 200. But I don't know, it isn't like it's the 50 moving average on the 3-day chart. Like it doesn't, to me, line up with any other longer term charts. So I don't know, if there's a reason to use the 150, let me know in the comments. I just don't know if there's that much use for it. And then, like I said, this is the 200, the big white one. All right, so let's zoom in a little, kind of get a good idea of what's happening. We've gone down in 2011, in 2012. We peaked in 2011 around August, beginning of August. And we've just come down now 50%, almost in just under a year. So we're going to zoom in a little bit. And our run starts in 2013. So you can see we're kind of getting some good action here. So let's start clicking through bar by bar and see what we find out. Had some resistance on the 200, just came back in, pulled into this cluster of moving averages here. Volume is just negligible. You'd really be hard pressed to trade this, trading 2,000, 26,000 shares a day, just really illiquid. This would probably not show up on your scans. Oh, I should also say these little arrows here, that's when a double inside day occurs. So you can see right in this spot, an inside day occurred, another inside day occurred, and then another inside day occurred. So you got 2 arrows there, and it just shows real coiling, a real tightening of volatility. So that's why I use those arrows. All right. So we had earnings report here. Okay, we kind of had almost the starting of a pattern here, and then it just failed it, and we're kind of going down. So obviously probably some disappointment from bulls who wanted the run to start again there. This is really interesting though, because all these moving averages are coiling together, which generally means in my mind that many different time frames have important levels around this area. The day traders are looking at it, the weekly traders are looking at it. Let's see. So we're still going. All right, we're getting really tight here in November, so something's probably gonna occur here. We're probably gonna get really tight. All right, we broke down. Oh, we kind of came back into range, going sideways still. So yeah, we had a little false breakdown here, found support on the 50 and the 65, and now it's popping up above the 200. Ooh, and now we just undercut that. So this is the worst. This is the worst type of market to trade right here for a breakout trader, right? You're looking at this coiling and you're thinking, oh yeah, this is going to go somewhere. And then it breaks down and you're like, all right, maybe it's going down. Then it breaks up and you're like, all right, those shorts, they got stopped out. It made new highs. People who piled in, the longs, now they just got stopped out. Just chop, chop, chop. All right, it looks like we are resolving down. All of the moving averages are coiled together there, which is just such a time of potential. And it looks like that potential is lower. And you can see also that the main market is leading lower as well. What is CLFD? I forgot. I said it earlier, but what are they? Communications equipment. Okay. All right, we're coming real strong off that down move. And this might be the first little flag here. The market is rallying up. It's come up decently from, you can see the left side here is the S&P 500. So it's come up from like 130-ish or 137-ish, 136-ish up to 143-ish. All right, we're looking good here. Ooh, no, we're not looking good. Yeah, see, look at that, man. December, we coiled up. It looked good, and then we broke lower. This is just what a choppy stock can do. But now it's a new year, right? We just turned over a new year, 2013. The first day of the year was a big update. You can see that green bar. That is the new yearly open. So we're above that, and the stock is going up. Okay, we got earnings coming up. So let's look and see if this earnings was anything. This is earnings on 124.13, estimated 8 cents, actual 4 cents. Thinkorswim is sometimes wrong. So let's check here if we go back that far. All right, news. We're going to go down. Let's see if we go back that far. Sometimes they do, sometimes they don't. Let's see, November 10, November 02. Oh, wait. What is going on here with these dates? Okay, here we go. 8, 17. Okay. So let's see. On December 6th, 13, so there's like just a big gap in news from here to here. Their CFO died in February 22nd of 2011, but we're in early 2013. So let's look at Seeking Alpha and see if they might have something. Let's go to earnings. No, how do you go to news here? Where was the news? I'm going to pause this real quick and find the news, and I will be right back. Oh, no, I can't pause it. Okay, never mind. Press releases. Here we go. SEC news. There it is. Okay, so we can select date range. we're going to go 2012 November the 1st to 2014 January 1st. Apply. All right, here we go. Wow, not much is here. So here's this. Okay, so here's the actual news that those earnings that we were thinking about. EPS of 4 cents beats by 1 cent. That's really kind of all we got. Looks like EPS of 4 cents beats by 1 cent. Yeah, not much other than that. Let's see if it goes back at all. No, we don't have much before 12, so we don't really know what the quarter over quarter earnings growth was, other than to kind of go back a little bit and see if. Okay, so the year before, it looks like earnings were 8 cents. So that's actually not great, right? If their earnings here was 4 cents. Yeah, estimated was 8 cents. Okay, so let's just keep going, see what we find. We made new lows here, and then we popped back up, and now we're going sideways. See, now like this was not a great, this was definitely a tightening, and then a breakout here off of the 20. So, I mean, you could go long that, but I don't think most people are going to, because you had a 26% run up. It's not a very strong stock. So let's just see, but the market itself is just ripping. So let's just see how it goes. All right, we're getting some lift off here. So now with this volume coming in, and our ADR is around 3, so I mean, it's not great. But with this volume coming in, now we're kind of looking at maybe taking one of these flags. Ooh, brutal. Popped down to the 20, came back in. All right, so now if it goes sideways here, we could have potential. It needs to go sideways. All right, this is not bad. We're going, here we go. We had an inside day right at the 10. So you could say, so this flag is 15 bars, not a super long flag, but it's made a run up of 40%. That's marginal, but I mean, we know the stock is going to moon here soon. So you could say, all right, let's buy at the highs. And that's the other thing, is a lot of times Chris's entries are, the entries he advocates are like on gap up days and stuff. And when we're in the past, we can't really mimic that. We could say, okay, if it gaps up, we're going to buy, but basically what we have to do when we're going kind of back through time is we have to be like, all right, well, I'm going to buy over this. So let's say we buy over, 562, like that's the trade. So boom, we would have been in. All right. So we're in the trade now if we would have taken it. And if we had our stop at the low of this bar here, we're almost stopped out. We got a gap up, lower, gap up, lower. I don't think we ever got stopped out. Low would be 550. Low here is 552. So we would still be in, man. That would have been a lot of pressure to hold through. And it looks like we are going. High volume day there. Let's see, where's the volume? Yeah. Okay, the volume's over here, by the way, when I look. So high volume day there. Just popped up. Oh, I should also tell you about these volume bars. Blue is obviously a down day. White is obviously an up day. Yellow is a very low volume day than average. So you can see it right here. These two inside days, very low volume. And then when it's green, it tends to mean that it's a high volume day and the stock closed in the upper half of its range. So that's why this bar is purple for some reason. All right. So, if we bought here and we held through this, I'd probably be taking some profits at 583, and I'd definitely be taking some profits up here. So I don't know. Right now, I would say I have maybe 50% of my stock left, 40% of my stock left, and it looks like it's been riding the 20 and not the 10 so much. So let's have a stop below the 10 and see how that works. See if it closes below the 10. Ooh, getting tight. Getting super tight there. Oh my gosh, this would be almost a good re-entry. You'd almost want to re-enter above 6. Let's say we do that. Did we get to 6 there? 596. All right, so up here, this is when I mouse over a bar, up here will tell you the high, low, close, and all that stuff. So if I mouse over this bar, high was 596. All right. Ooh. So that would have, we would have gotten stopped out, I think, this day. I think this closed, the 10 moving average was at 592. We closed at 590. So we would have been out that day. We would have avoided this. But this stock has now run 60% almost. And so, yeah, we're looking for other setups. So that would have been a profitable trade. Very nice. It's kind of messy, but profitable. That could have been an entry day. Ooh, man, this thing is just, look at these undercuts. 1, 2, 3 undercuts. Man, that would be, for me, when I see undercuts, and this is just my experience, like 1 undercut, that's good. 2 undercuts, that's even better. 3 undercuts, you start to go, what? Like, what if buyers don't come in on one of those undercuts? All right, I say we still buy over, all right, so that hit 6. I say we buy over like 603. Did that hit 603? Oh, that hit 604. So we're in. I'm in, I should say, on that day. Higher volume, I would have been happy with that. Stop would be below that day's low, which is 595. That wouldn't be, it'd be huge size. I wouldn't be comfortable with that close of a stop. I might want to stop below the previous day's lows. But let's just see how it works out. Yeah, you would have got stopped out the next day if you'd had the stop at the lows of the day. So close strong, riding the moving averages. Ooh, yeah, you would have got stopped out there. That's the 4th undercut and reclaim. Just brutal. Gap up after the undercut, another undercut. Oh my gosh, this would have been brutal to trade. All right, we're getting a breakdown. We close low, going sideways here, still in this range. Market itself is just blazing higher, doing well. Market's breaking out. This isn't breaking out. That's what's interesting is you can almost see it's really following the market here. It went sideways with the market. The market's now breaking out. It's not breaking out unless this is something. So we got stopped out there. We had a profitable trade. We tried this. It got stopped out there. Now, let's say let's stop messing around. We're gonna buy over 610. Although we just had a strong up day, we're not having tight days. So in reality, I would not be touching this. But because I know we're gonna have a good run here this year, I would probably I'm saying we're buying over 610. So we'll see. Another inside day, double inside day. Wow, market took a crack, went back down into its range after breaking out. All right, now we're starting to actually look like we're rolling over. Oh, what did we hit? High 610. So like technically we might be in there, but if I were watching this, I would want to get in like 605 or 6 or something like that because it made this new range this lower. But in general, this is a choppy, ugly pattern. So let's just see what we do. Boom. Okay, and that was an earnings day. Let's see. Earnings, 4 cents, 425.13. Let's go look at that. 425. This guy here. Okay. Earnings of 4 cents, revenue of 10.5 million. Doesn't really say much other than that. Did we have anything from this? No. Let's see. Does this? Yeah, this doesn't go back. So sadly, I picked a stock that doesn't have news on here, which is unfortunate because this can sometimes say this is much more comprehensive in the news. But yeah, for some reason it's just not in here, which is a bummer. So what do we know? This 25th, 2013, EPS of 4 cents, revenue of 10.5 million. And do we have, it's just outside of our range. Here we go. 1 cent. So 1 cent was the actual, 4 cents now. Hey, we're up like huge, right? We took our earnings from 1 cent to 4 cent. This is triple digit earner right here, baby. And I want to actually come back and watch this day because this is an EP if you've ever seen one. So this day is April 25th. So we're going to come back in time. and we're going to go look at that day at the end of our session. Huge volume, higher volume than everything. This is an EP, although it opened there and it came down, so it might have stopped you out if you tried the opening range break trick. But this is a huge EP. Yeah, and that's, oh my gosh, that's how we go, baby. Yeah. All right, we're starting to go sideways here again. Have a little breakout from that sideways action. Wow. So far, it's staying above. Ooh, would have got stopped out there. So maybe we're going to create some kind of, we had some more sideways action here. So we kind of have like this trend line. The volume, let's look at the volume compared to what it was. I mean, this stock is like in play now. Oh, yeah. So let's just look at this real quick because this is not a traditional flag. This doesn't look great. We had a breakout. It was too short, and then we had finally a breakout here. So this is really like an 18-bar flag. First off, we had like a 9-bar flag, which you only do a 9-bar flag in my experience if something's really hot. And this did seem pretty hot, but would have been tough. If you were in from the EP, you're super happy if you're trailing it with a 20. But we had another flag here, popped up, came back down right to the 20. And then it popped up here and had 2 tight days. So this was really, this 530 would have been a really, for me, it would have been tough to take just because of how messy it is. But this was the day you wanted to get in. And we are just blasting off. Ooh, really tight there at the top. Continuing. Excuse me. Ooh, broken. All right, so if you were in at the EP from here, you just got stopped out there. You had a 52% winner, but it was a 120% winner. That would have hurt a little bit. If you trailed with the 10 after it went kind of parabolic here, you might have gotten an 80% winner. But yeah, so now we're breaking down. Look at all this volume coming in. And look at the market itself. The market itself was going sideways as this was going up. So this was showing huge relative strength. Are we still recording? Yeah, we're at almost 40 minutes, so we got to wrap this up here. Huge relative strength, and then, bam, it kind of came down hard. Nice, finding some support at the 50, bouncing really hard off the 50 as the market bounces. Wow, really hard off the 50. So, I mean, this is not a great, this is not a pattern that you're like, yeah, I want to buy that day. That's a pretty steep sell-off, 35%, but it found support right on that 50/65. Market's going higher. It's going sideways here. Oh, all right. So this earnings, 725.13. Let's see. Really don't have news for it. We just go to July the 2nd, so we don't know what happened. 9 cents was the actual earnings. Let's go to July the year before. 14 cents was the earnings then. So that's a dip in earnings for sure. 9 cents to 14 cents to 9 cents to 14 cents to 9 cents. That's rough. All right. So let's see. We're going here. This is kind of an interesting little tightness here. It's riding the 50. So there's still an orderliness to it, which is good. The market's rolling over. And it's rolling over. It lost the 50. Now it reclaimed. This is almost like a wedge pop that Oliver guy talks about. That might be a good buy, although its volume is kind of low. So, and we're in the summer. We're in August. Wow, getting really tight as it's going up, showing real orderliness. I mean, this is, we went from like a lot of craziness. You can see these huge swings to now kind of getting tighter here. We just filled this gap down from the earnings. All in all, I think the run is mostly over. All right, main market is breaking out to new highs and then pulling back in. That's a large volume day on this thing. I mean, you could make a point of buying over this inside day here, this high at 13.16. That might have been a trade. Made new highs. Look at that. Made new highs, then pulled back. Oh, baby. So this was actually, so after it made new highs, it pulled back and went sideways. So like this is actually not a bad trade here. Let's also look at the volume coming in. So this is 1017. I'm going to go back in time and look at 1017 as well, and we'll see what that day looked like. So let's see how that trade would have worked. Coming back to the 10, going tight again, coming back to the 20, stop below the 20. So that trade really didn't work that well. This is kind of getting long in the tooth. Oh, look at that tightness. Yeah, no, that's looking good. Bam, breakout there. And we are running. Oh, wow. So breakout there, that would have failed. This thing has a lot of failed breakouts, which is annoying for the trade. But it just kind of shows that you got to kind of come back to the well. I think we're going to call it here. I don't want this video to go like over an hour, but this thing obviously kind of kept kind of chopping around and going. Oh, this was a nice flag here. Let's see, that was 13 bars. But again, it's kind of getting into the failed breakout. Oh, yeah, lower. So, okay, I want to take a picture of this flag. This flag was a thing of beauty, and this was after a big EP. I'm going to take a snapshot of that. Oh, to the volume like this. We're going to copy this. We're going to say this is CLFD. FD flag after EP. Very nice. I mean, very nice for its run, but it didn't necessarily set up the best. You know, but that's this is what you want to see, right? This is the move you want. You want 67%? Yeah, so even if you missed the EP, if you got in this day, this went 75% in 18 days. Like, that's amazing. That's a great trade right there. This was the real winner. And there's just really one winner after the EP. There was an EP that was great. It went sideways for a long period of time. You had a great EP. Then it went sideways, broke out higher. Not bad. All right. So we're going to go to on demand. And this feature is so buggy, but we're going to try it anyway. Let's do 9 months, 1 day. And we're going to go back in time to April 25th, 13. April 25th. And we're going to go to like 10:51 in the morning. So an hour and 20 minutes of trading have already occurred. I hope this works. This thing is so buggy sometimes. It just takes forever. So this is what it looked like going into this day. I mean, if you had woken up and seen this and seen it gapping up to there, wouldn't you want to be in? I totally would want to be in. So if we go to the 1 minute chart of that day, come on, baby. Come on, baby. There we go. So we don't really know how much volume was pre-market. This post-market, pre-market volume is kind of inaccurate down here. But this would have been, the range on this bar is 3 cents. So, I mean, if you had done it didn't even trade on the second minute. It goes from 6:30 to 6:32, which means there was no volume that even traded at 6:31. So this was really not a very liquid stock. So if you had waited for the 5 minute, this was the 5 minute opening range. You could have bought there. Your stop beneath the low. The range on that would have been 20 cents. So whatever your max risk is divided by 20 cents would have been your size. And wouldn't have been too bad. Let's see if we can go to the end of the day. Is this in 24-hour time? I don't remember. Let's see if it stops out. See, this is when it gets really buggy, is when you try and skip ahead. Let's see, 2, go. Come on, work. Yeah. The 1 minute doesn't work to do when you skip ahead like that. All right, sometimes if you turn it on and off again, it'll do its thing. All right, we turn it off. Turn it on. All right. Okay, yes, it did. It went to 12:54. Okay. All right, so you would have got stopped out on your EP play. This definitely would have been one you had to re-enter, and I don't know if you'd have want to. I mean, look at how illiquid this stock is. That would have been really rough. But obviously, from here, it goes nuts. The other day I wanted to look at was 10-17-13. So let's go to 10-17-13. Go. Let's see if we can go back in time to that. All right, so now this day, so the EP that we were just looking at was way down there. Look at how tiny it is. And we've come up here, and this was the breakout that did not work. Much more liquid, you can see. Look at that. Just beautiful. You could have taken the 1 minute opening range. You could have taken the 5 minute opening range. You could have taken the 15 minute opening range. And you were looking at least at a great day trade, almost up 10%. So anyway, I think we'll wrap it up here. I think it's been 45 minutes now. And if you like this, if you like the form that this is doing, I'll do more of them. Obviously, they're not all going to take 45 minutes because I'm not going to have to explain everything. Maybe 20 minutes per video. We're going to just go through one stock and its history, and depending on how much history that stock has, it could take longer or shorter. If you like this, let me know. If you think it could be better in some way, let me know. I'm open to all feedback. Was this helpful? Were there trades that you saw that I missed? Maybe you saw a trade that I missed. If so, write it down in the show notes. And I welcome all criticism or comments. Give me your thoughts. And thanks a lot for watching. Talk to you soon.